Why most traders really fail. Most traders believe they fail because they don't have the perfect strategy. They think the problem is indicators, entries, exits, or secret systems. But that's not the real reason. Most traders fail not because of bad strategies, but because they lack routine. They wake up every day reacting to the market instead of following a process. One day they trade aggressively. The next day they hesitate. Another day they revenge trade. And sometimes they don't trade at all. This inconsistency slowly destroys their confidence, discipline, and account. So let's define something very important. A trading routine is not a schedule. It's not waking up at a specific hour or opening charts at the same time. A trading routine is a repeatable decision-making system. It's the structure that tells you what to do before you trade, how to behave during a trade, and how to think after the trade is finished. Routine is what removes randomness from your actions. And here's the truth most traders don't want to hear. Routine equals consistency. Consistency equals survival. And survival is the first step to profitability. If you can't survive emotionally, mentally, and financially, you will never compound. This video is not about motivation. It's not about hype. It's about building a routine so solid that even on your worst days, you still act professionally. The psychology of routine, why your brain needs structure. To understand why routine is powerful, we need to understand the brain. Your brain hates uncertainty. Every decision you make consumes mental energy. When you wake up and ask, should I trade today? Which market should I focus on? Is this setup good enough? Should I risk more to recover losses? You are draining cognitive energy before the session even begins. Neuroscience shows that habits reduce cognitive load. When actions become automatic, the brain uses less energy and makes fewer emotional mistakes. This is why routines work. A routine protects you from overtrading, revenge trading, fear-based hesitation, impulsive decisions, emotional tilt after losses. Think about a pilot. Before every flight, pilots use a checklist. Even with thousands of hours of experience, they never skip it. Why? Because checklists protect against human error under pressure. Trading is no different. The market creates stress, speed, and uncertainty. Without a routine, emotions take control. But with a routine, you don't rely on feelings. You rely on process. A trader without a routine reacts. A trader with a routine executes. The 5 pillars of an unshakable trading routine. An unshakable trading routine is built on 5 pillars. Remove one and the structure collapses. Let's break them down. Pillar 1, preparation. Winning starts before the market opens. Preparation is where professionals separate themselves from amateurs. Most losing traders open charts and look for trades. Winning traders prepare before looking for opportunities. Preparation includes reviewing higher time frame structure, identifying key levels, checking economic news and events, defining acceptable risk for the day. This step removes surprise. It gives you context. When you prepare properly, you know what you're waiting for. You know what setups you will ignore. You know how much you are allowed to lose. Preparation creates calm. Without preparation, every candle feels urgent. With preparation, you wait patiently. Pillar 2, execution. Following rules, not emotions. Execution is where discipline is tested. You can have the best analysis in the world, but if you don't follow your rules in real time, it means nothing. Execution means entering only when your criteria are met, respecting stop losses, following position sizing rules, accepting losses without reaction. The market doesn't reward intelligence, it rewards obedience to process. Your routine should make execution boring. Boring is good. Boring means controlled. When execution becomes emotional, mistakes follow. Pillar 3, reflection. Journaling is where growth happens. Most traders skip journaling because it's uncomfortable. Why? Because journaling forces honesty. Reflection means writing why you entered a trade, recording emotions before, during, and after, reviewing mistakes without excuses. tracking patterns in behavior. Losses don't teach you anything if you don't analyze them. Journaling turns pain into data, and data builds confidence. Pillar 4, recovery. Rest is part of discipline. Most traders think a more screen time equals better results. This is wrong. Mental fatigue leads to overtrading, poor judgment, emotional reactions. Recovery includes taking breaks, exercising, stepping away after losses, resetting mentally. A tired mind cannot trade objectively. Your routine must include recovery, not as weakness, but as strategy. Pillar 5, consistency. Repeating the same process every day. Consistency is the glue. You don't change your routine based on yesterday's win, yesterday's loss, your mood, market noise. You repeat the same process. Professionals don't look for excitement. They look for stability. Consistency builds trust in yourself, and self-trust is everything in trading. Designing your personal trading routine. Now let's build your routine step by step. Morning ritual, setting the mental frame. Your morning routine sets the tone. This should include reviewing your trading plan, defining daily risk, visualizing discipline, not profits, reminding yourself of rules. This is not about hype, it's about grounding. You're telling your brain, today I follow the process. Trading session ritual, the checklist before every trade. Before every entry, ask, is this my setup? Is risk within limits? Is the market condition aligned? Am I calm? If one answer is no, you don't trade. No exceptions. This is where routine protects you from yourself. Evening ritual, review and release. After trading, journal your trades. Review execution, not outcome. Note emotional reactions. Close the platform. Do not carry the market into the night. Detach. Tomorrow is a new session. Weekly ritual, strategic review. Once a week, review statistics. Identify repeated mistakes. Adjust rules slowly. Remove unnecessary complexity. Weekly reviews turn experience into wisdom. Case study, routine versus chaos. Let's compare two traders. Trader A, no routine. Trader A wakes up late, checks charts randomly, trades based on emotion, increases risk after losses, skips journaling. Results? Emotional exhaustion, inconsistent performance, loss of confidence. Trader B, strict routine. Trader B follows the same structure daily, prepares calmly, executes only valid setups, stops after max loss, reviews every trade. Results? Emotional stability, slow but consistent growth, strong self-trust. The difference is not intelligence, it's routine. Routine builds confidence. Confidence builds discipline. Discipline builds results. Discipline is built, not found. Routine is the foundation of discipline. Not motivation, not talent, not intelligence. Simplicity plus repetition creates an unshakable routine. You don't wait to feel ready. You build readiness through structure. Start small. Be consistent. Protect your process. Build your routine today. Don't wait for motivation. Discipline is built, not found.